Folks, we get to talk to Taylor from Life Goal Investments once a month, and we got to talk economy, Fed, interest rates, recession. Taylor, where are we going? We got some good reads on inflation last month, right, for the month of May. We'll get CPI. I think it's the 12th of June. What do you think's going on with inflation, the Fed, all that stuff?
Yeah, it's interesting. So inflation the first quarter came out kind of scary high. It
Yeah,
wasn't really scary high. It was the directional change that
it
was like,
broke trend.
oh
Yeah, it broke
no,
trend.
this doesn't
Yeah.
look good. Right. And rate of change is obviously hugely important. And then I guess the April, May data came out pretty darn subdued, back in
Yep.
line with the trend as things were moderating. And when you look at some of the seasonality behind it, a lot of it is attributable to insurance and
Mm-hmm.
insurance increases that happen on an annualized basis. And
Yep.
as the value of cars, the value of homes go up, and cars were the really big one. But as the value of them go up, as does the underlying insurance premium on an annualized basis. And it was real. It was meaningful. But since then, you've seen some moderation in insurance, in insurance, yes, but also in just the underlying inflation data. And some of that also is getting the tailwind in a good direction by oil prices moderating some,
Sure.
which has certainly helped. But yeah, the inflation data was eye opening earlier this year, and now
Yeah.
it's become much more sanguine.
And let's talk about jobs. Obviously, you watched the monthly numbers. We went from, I think, the last time we spoke, 3.8. We're now sitting at 4. We get another number this week on Friday. Um, are you a believer in the Psalm rule, right? We need to get to 4.2 before it breaks. Do you think the Fed cares at 4.2? That, when's the Fed kind of wake up and go, ooh, that's a problem?
See, I'm struggling a little bit here, candidly. I don't think that they're breaking down the data enough. And I think that, yes, we're seeing a ton of jobs added every single month, but on the net basis, we are negative full time jobs in
Oh,
the
yeah.
past
It's
year.
horror. It's like 600,000 or 800,000.
Yeah,
It's
and
bad.
it's like, yes, we can add jobs, but they're not good jobs, right? And so I just am really concerned that that's going to come home to roost at some point. But the jobs data has been, if you're just looking at it from a surface value perspective, it's been consistently positive. The
Yeah.
jobs market's been strong.
Yeah, it's funny when I started digging into the jobs number. I think it was 3 or 4 months ago when they posted that 386 one. I'm like, there's
Yeah,
something
yeah,
here.
yeah, yeah.
It's like, what the hell? And yeah, dude, there's the loss of full time jobs, part time jobs. They do also do this. The big thing that I saw that month, there was a birth death calculation change that was like 80% of the increase. I'm like, you're not telling people that you changed the freaking model.
I didn't know that. Admittedly, I didn't know that.
Yeah, I forget what my, it's like, come on, guys. And of course, we can also go talk about revisions, right? I think it was 7 out of the last 9 have been negative.
Yep, yep,
Nobody
yep,
reports the revisions. I'm like,
yep.
I personally don't think the job market is all that strong. I also don't believe the Fed's cutting interest rates. A lot of people I talk to, not Wall Street guys, so that's why I come to you. They're thinking the Fed cuts at 4.2, and they think we could be at 4.2 by August, right? 4.2% unemployment rate.
Yeah,
I
that's.
actually,
I mean, that we're in a stone's throw from there right now.
yeah, dude, we could be there, this week, if not this week, next week. But I actually, so let's talk about rate cut expectations because I don't know that I've changed my opinion. If you don't remember, I'm going to withhold it from you for a minute just to see where you're at. Where do you see a July, September post election? What are you seeing?
I've been sitting on zero. And so I've been on that. I don't know that I was on that at the beginning of the year. I think I said no. I remember specifically saying at the beginning of this year when they were pricing 7 rate cuts, I said
Yeah.
there was a 30% chance that we got
Yeah.
zero this year. So I was
Okay.
I was not at zero, but I was massively,
Yeah.
massively under
Below the
the number
market.
of rate cuts the market
Yeah.
was. I'm still on zero. I think that the Fed was so late to the game to raise
Mm.
interest rates and they are so darn data dependent they can't see things in front of their own face that they're going to wait for this to become very obvious that now is the time to cut. They are the inflation boogeyman, and that seems to be all that they seem to be focused on. And
Mm.
the unemployment numbers, and that really is going underwhelmed right now from a focal standpoint. And the jobs data has been fine, right? So with that, if it's not broke, don't fix it.
Yeah, I agree with you. I think zero is probably leading race. My call is actually 1 right after the election. I think it's November 6th or 7th, whatever that Wednesday is. and it's actually going to be half a point. No chance for July,
Interesting.
very,
Interesting.
very unlikely in September, but I actually think the data is going to get much, I guess, worse and better. What do I mean by that? I think the
Yep.
job market, I think the job market come November, right? Because we'll have a jobs number that Friday,
Yep.
which, so again, it's really, really interesting because I think the Fed meets that Wednesday. The job number is that Friday. They'll have the data Wednesday.
Yep. Yep.
And I think it's going to be the other thing. I think is inflation is finally going to start to crack because we had a lot of shelter inflation. I think shelter inflation still reading 5.6%. It's nowhere close to that, right? When you think
Right.
of rent in actuals.
You see it
It,
firsthand, right?
oh, yeah, absolutely. I think rent's down in a lot of the country, certainly in apartments. Maybe it's flat in housing, but it's certainly not up 5.6%.
Right.
That's just bad math.
Right.
So I think there's a good chance that CPI is, that month, November, probably like headlines, maybe 2.5, 2.6. So you
Mhm.
get CPI headline to 2.6, you get the unemployment rate to like 4.4, 4.5. They're going to cut aggressively. That's kind of what I see in November.
It's interesting. I think that from a broad standpoint, most educated folks that I hear, and I mean like really educated economic economists seem to think that they could use a cut right now, right?
I
And that
hear
we're
that too. Mark
pretty darn
Zandy.
restrictive.
Yeah.
Yeah, we're pretty darn restrictive from a policy standpoint. And the public wants to hear that and doesn't want to hear that. If they're in the housing market, they want to hear it.
Yep.
If they're not in the housing market, they don't want to hear it because they're scared to death of inflation still.
Correct.
And I think that most of inflation has moderated and dissipated at this point. It doesn't feel good because you're still up 20% versus what you were paying in 2019. But at the
Mm-hmm.
end of the day, it's the rate of change. And the rate of change has slowed dramatically. And I think that one of the things that people didn't realize is when they were starting, the comparisons to the 1970s, which was the really only analog that we can look at where inflation got really nasty in recent history, was the fact that there was an oil embargo that drove that to where it was. And guess what? We're a net exporter right now. And if
Yeah.
we need to pump more oil than we currently are, we absolutely have the ability to. Now, regulation might have to be taken down a little bit, but nonetheless, if it becomes a problem, even the Democratic side of the aisle, which is the anti, drilling side of it, we're right now drilling more oil than we ever have in this country.
Yeah.
So if we went right, obviously the oil, output would even increase from here. So that is a huge input cost on everything, to state the obvious. And if that really can't create the problem, then that's one of the big catalysts that's just non-existent.
So we're going to close this by talking about the election with also not talking about the election. So we're not going to talk about either party or either person. I just want to talk about it from a Wall Street perspective.
Yep.
I'm actually now telling people I think the housing market is going to get even slower because of the national election, because of the hate, I hate you, you hate me going on. I think there's a lot of people that are just not going to make any moves until after the election. So I think housing is even going to get slower. Sorry, agent. Sorry, brokers. But what about the stock market? Do you think there's some folks in the stock market that might be going, you know what? Let's just keep the money in cash. Let's go do some money markets. Let's just wait. Let's wait to the election because if so and so wins, it'll do this. And if the other guy wins, it'll do that. Do you think the economy is just going to slow down even more because of this election coming?
It's interesting. You've heard this a bazillion times. Zoom out, it doesn't matter who's elected. And I think this would shock most people who are at all in tune with economics. We've actually done slightly better on our Democratic regime than we have Republican, which is kind of counterintuitive to how they think about the economic world. But there could be some choppiness that's coming up here. There's no doubt about it because different policies get put in place and then corporations adjust to it.
Mm-hmm.
I think that there is a fairly logical argument to say that if Trump is put in office, then inflation could continue to persistently be a problem. And then I think that if Biden gets put into office, I think the kind of more recessionary tone is a little bit more of an issue than the inflationary tone, just because of how they view regulation, economics, taxes, etc.
Yeah.
Trump is under the game of like, listen, take away red tape from regulation. Don't increase taxes, leave them the way they are, which could be a little bit of an inflationary
Yeah.
pressure.
Don't tax
Whereas
tips. I think I've heard.
Yep. Whereas on the other side, you're looking at Biden saying, hey, let's increase regulatory pressure. Let's take taxes and increase them, sucking money out of the system. And that could be, a little bit more of a cog that leads us in the
Hmm.
in the position of recession.
But at the end of the day, really what I'm going for is the investor psychology. Do you think this election is different? Again, zooming out, maybe it's not. I got to tell you, this election feels certainly more contentious than, the 12 or so that I've seen or whatever it was.
I,
Um,
I, yeah, I think that you're probably right. I don't have enough context where I've seen enough presidential cycles firsthand. This
mm,
seems bonkers to me. And I won't go down all the reasons because we're not going to get into that, but it just seems like crazy madness world that we're in right now.
yeah, and I think when in doubt,
Maybe
people pull back. I'm just guessing.
Yeah, yes, I agree. And we're hearing it firsthand from our clients. And we talk them through like, listen, guys, we've seen these cycles. We know how this goes. And we're not a always, hey, put your money in now kind of perspective. But it's like the longer term view, if you're a long term investor, continue to chunk along here. And
Yeah.
yes, in the short term, you might get some pressure, you might get some volatility. It might provide some good entry points, right? If you get some
Yeah.
volatility and a pullback here or there that might just be headline news oriented, might be a really good time to pick up assets on the cheap. But
There you
yes,
go.
there definitely is some sitting on the hands perspective that will be experienced, no doubt.
There you go. Taylor, where can people find you?
Yeah, find us at Life Goal Investments. We're on both Instagram and on TikTok. 60-second daily videos.
You got it, buddy. Take care. You do a great job.
You're the man.